What you're looking at is the exact pattern I spotted before NVIDIA's 180% run. And right now, 3 stocks are showing this same setup, but with even stronger fundamentals. Over my trading journey of half a decade, I've learned that the biggest winners share one critical characteristic. They break out to all-time highs with massive institutional buying. These aren't quick trades. These are stocks you want to hold for potentially life-changing returns. If you want to catch these setups before they explode, join my Profit Punch newsletter. I analyze thousands of stocks every week to find the next potential NVDA or SMCI, which moved over 200% this year. My subscribers got early access to SMCI before it got its 240% run, so there's a link in the description if you want to join. Also, I spent countless hours analyzing charts to bring you this in-depth content. So if you want more analysis like this, smash that like button and subscribe to the channel. I would really appreciate that. So let's break down these 3 potential future market leaders. The first one is iTree. So as an investor, we want to have our weekly chart on the left and our daily chart on the right. Our weekly chart is our primary work area. We have the 10-week simple moving average and the 30-week simple moving average. We have our earnings table here and we have return on equity here. The daily chart is just something we use to pinpoint exactly where we should get in. The first thing that we are seeing is a breakout on very huge volume. So I color code my bars. We have our all-time high line of resistance here. Stocks always fail around the same level. This is always quite interesting. This is not a surprise. When you keep drawing these lines, you'll see that stocks always respect these levels. I could draw a line here. You're going to see it respects that level somewhere, somewhat. Yeah, so around here, you can see there's another line here. It's always quite interesting how it does this. So you see another line here, tops here, it's just a support for here, then it is where it actually gaps up to and supports in the future. So these trend lines are always things to look out for. That's why we want stocks at all-time highs, because these are stocks that do not have anybody looking to sell immediately. And then when we look at the fundamentals, we always want to see revenue growing at least 30% over the last 4 quarters. This is saying, boy, I got better than that. 96% and 533%. The only bad sign is that the growth is decelerating. We want to see accelerating growth. So if it was 96, then 110, then 500, this would be even more superb. So revenue, we want to see an average of 15% over the last 4 quarters. For okay stocks, we want to see 40% for super growth stocks. So of course, this is not at NVIDIA's level. Return on equity, we want to see 17. We don't have that here, but the technical patterns are looking just right. So it breaks out in this huge volume. We can see here in the weekly chart, it's above the 50-week. This particular green bar, I color code my green bars. So whenever it's green, that means the volume is at least 50% more than what it normally is. It's a very nice cup and handle. You can see it over here, breaks out and is now pulling back on little volume. It failed at the all-time high, but I have a strong feeling it's going to break out because this is a strong market. So we can see that pattern on the daily chart. So as an investor, you don't want it to fall 7% below this breakout point. So what I would do is that I can just put in here and maybe take a stop that would just stop around $107. And then I would hold this thing since it's going to all-time highs and see wherever it goes. The next one showing a very similar pattern is PGR. So this is a financial stock. Return on equity, 21, amazing. Earnings per share growth, this is crazy. It's really good. We want to see 30s, it's in the hundreds. Whenever you see hundreds in growth, you just know this is a super stock. Revenue, we want to see 15% for an average stock, 40% for a very great stock. This is just in between. So this is a very good sign. This is something called the late stage base. So it has not gone through a big correction. It's just continuing. So we're not sure how far it's going to go from here, but it is going to go up for sure if it does break out. We're not seeing the same exact volume that we would like to see, because when it's breaking out, you want to see some really strong volume. But the cup and handle is there. So let us wait and see how it reacts. So for such stocks which are not showing very good fundamentals, what you can do is buy maybe 50% right now. So maybe just put 5% of your account and then see how it reacts. If it comes back and fails, this one, the stop out just use 3%. So if you have a $10,000 account, you put in $500, the max you're going to lose is about $15 to find out if this is going to work. So the fundamentals are great, but I'm not seeing very strong technical patterns. But there are other stocks which I'm going to show you which are showing even better patterns. Now, the best of the best right now that I'm seeing is something called NRP. Now, when you look at NRP, the first thing that you can see is that the fundamentals are poor. And you're like, Valentine, why would you suggest this stock as a long-term hold? But I'm like, this is something called an industry move. A lot of times, stock will move in industries, despite the fact that they have poor fundamentals. If the industry is moving, that means that particular industry, big investors know that it's going to be making a lot of money in the future. So the reason why I know this industry is going out is that let's look at other stocks. We can see, let's stick to the weekly chart. We can see CEIX, it broke out on very huge volume, and then it's going to all-time highs. That's a very good sign. We can see HNRG, which is also a call stock. We can see it forming its like cup and handle here, and it's breaking out also on very big volume. So this is another good investment stock that you could do right now. I'm just not recommending it because it's overextended for the breakout. You would have to wait for a correction right now. So it's more like a watch. Another stock in this same sector is ARLP. So we can see after this very big multi-year base, it has broken to all-time highs. And whenever stocks break out these multi-year bases, they are going to do huge moves. This is how NVIDIA started. So you can see this big bears over here. This is also something called a virtual contraction pattern from Mark Minervini. So what it does is that it corrects 36%. It comes back again. The second correction is about 20%. Then the next correction is about, it's way smaller too. It's about only 12%, and then it breaks out. Of course, I'm not saying the big volume that I want. Actually, the big volume is here. It did break out in huge volume, but right now, this stock is also extended on the daily chart. So you missed it if you're watching this video. If you want to catch the stocks in time, please subscribe to the newsletter. The only stock that is showing good signs in this industry is one I told you, NRP. So you can see the stock is not going to all-time highs, but it has broken out of a very big base, and it's an industry move. So this is something which could move again for a while. We can see last time it did something like this. It moved from $52 to $89. But also you always want to be in the industry leader. So this is not the best stock in the industry since the best stocks have already moved. But if you're late, this is something you can capitalize on. The next stock is going to be tricky for you to understand, but this is a very complicated play, which I feel like you guys should know. Okay, so what is happening is that we can see that Gap had earnings, and Gap moved on huge volume. But Gap is not the best stock in this industry. ANF is the best stock in this industry. And ANF already did a 700% move. And then we can see it correcting here. So it is contracting and it's just waiting to jump out. Why is it waiting to jump out? It's because it has earnings this week. But then there's some investors who already bought the stock and the stock already jumped before earnings. So my first hinge is that this stock is likely to have good earnings because you can see it is breaking the trend lines now. It's closing above the trend lines. So I think the earnings might be good. Now, one thing is that you don't want to be speculating on earnings because it's a very speculative play. But what I found is that normally once the stock jumps up like this and forms something called a pocket pivot, where the volume on that day is higher than any red volume in the last 10 days, this is normally a sign before stock reports its earnings that some people know something that the stock is likely to jump out. So what I would do is wait for this stock. As soon as it buys earnings, if the earnings are very good this Tuesday, you can get in for the earnings. And I think since it has crossed this trend line, then you can just buy it for a very nice, huge move. The fundamentals of this ANF stock are very good. We can see hundreds of percents. The only bad sign is that the earnings growth is decelerating. We want to see it accelerating, but it is decelerating. The revenue is good, 20% of the last 4 quarters. Return on equity is about 17. This thing has 38. So it is still a good stock in a very bullish market. Now, of course, the only bad sign is that it has already moved quite a while, and this is a late base, but let's see how far it can go from here. I'll be letting people in the newsletter know when to get in if this thing does move. If you found this information very helpful, please like the video, subscribe to the channel, and may the markets be with you.